Now on Thursday at 1:30 we have the US GDP print, which is expected to come in here at 2.4%, down from the prior reading of 3.4%. Now at the latest Federal Reserve meeting in March, the US Federal Reserve expects GDP to be at 2.1% for 2024. So if we see a firm US GDP print on Thursday's data we would expect to see a bit of upside in the S&P 500, as that should be supportive for the soft landing narrative and could well mean S&P 500 gains. However, a weak GDP print could also be supportive for stocks, as that may mean the Fed has to move more quickly to cutting interest rates. So the potential is that there's asymmetric risk for the US GDP print on Thursday, with the potential for both a weak and a strong print to find S&P 500 buyers. On top of this, seasonal risk event analysis, and we're looking here at the GDP print over the last 5 years, from the day before through to 6 days after the GDP print, with the GDP print happening here, you can see that the S&P 500 has actually gained 75% of the time. There's also been a median return of 1.27%. So, will the S&P 500 find buyers again this time? The major trade risk here, of course, is that we have the US PCE print on Friday. And the PCE print on Friday will also likely have a very strong reaction on the S&P 500. And if this comes in much higher than markets are expecting, then you could expect downside in stocks. Also, if there's geopolitical risk flaring in the Middle East again, that could be negative for stocks. So there are two-way risks here. Sign up here at SeasonX for thousands of more seasonal insights just waiting to be revealed. Remember, don't just trade it, SeasonX it.